Welcome back. Well, as we just spoke about the VIX the other day, breaking above the 20 level for the first time in over 100 trading days, I thought I'd take a different look at the VIX. What we're looking at here, the yellow line is the S&P 500. The black histogram bars are not the VIX. They're the results in Google Trends, meaning Google Trends measures the frequency of which the VIX term is searched for. And what we can extrapolate from that is that the greater amount of times, the average person will search for, the VIX, the keyword VIX, maybe that indicates the more concern that traders have over the long term. And we can see as a yellow line goes up, the S&P 500 goes up, the Google VIX goes down. Now, what it is exactly is this. Google provides statistics, data, as far as how often a certain keyword is searched. What this calculates is the weekly frequency in YouTube searches. Those of us looking in YouTube for videos about the VIX, the volatility index, also known as the fear index. It goes up when the stock market goes down, and it's measured on a scale of 0 to 100. 100 represents the maximum amount of times in a given time frame that this term was searched for. So go back to 2018 through present day. The black line is the S&P 500. Notice in early 2020, we know March 2020, we had the COVID crisis, stock market, very quickly sold off. And then notice the histogram bars skyrocketed higher. And during that stock market sell off in March, April of 2020, we saw a 100 level, which means over the past 5 years, this day or this week actually shows us weekly time frames, shows us the greatest time, the greatest frequency when most people were searching for the keyword VIX, volatility index, within this calculates YouTube searches in particular. Now, we can see here, this is the 1 month percentage forward performance based on the VIX Google Trends results. So if we take a look at any particular time, let's say over here, 10, which represents 10 out of 100, so very, very low, and we were to buy the S&P 500 based on every time our Google Trends registered a 10 over the past 5 years, we would average around 3.1%. 2.9%. If we go up to a 60 level, we now see the S&P 500 looking forward averages around 4.1% over the next trading month. And what this shows us is a greater frequency of time that traders are searching for the VIX. It means the market's already gone down. And usually the market, over the past 5 years bounces back for the most part. Now we see here the white lines, the S&P 500, the red histogram bars. These represent the 4-week moving average. So it's a little bit of a delay that we've worked into this. And it shows us, so when the stock market goes down, the white line, the S&P 500 goes down in 2020. That's a COVID crisis. We have a little bit of a delay, and then we see the results. This shows us how bearish those people that were searching for keywords in YouTube, they could search for anything, but they chose to search for VIX. That's how negative, how bearish their outlook was. There is a little bit of a delay. Now, conversely, when the stock market went up and we see these all-time highs late 2021, around December, January 2022, the VIX keyword results were very low, around 10. So when traders or anybody for that matter, not searching for VIX in YouTube, it shows us that the market's very strong. And why would we search for it? Because the fact of the matter is the market's going up and we're not concerned about the VIX under a strong market situation. But conversely, when the stock market starts to go down, we tend to see the frequency rise. And there is a little bit of a delay, and that's important because it really kind of shows us the sentiment. In this case, we see here the S&P 500 is a white line, and the area chart in the background, that's the 4-week moving average of the VIX. It's zoomed in a little bit so we can get a better idea of where we are now. Notice the S&P 500 hit a high around mid-July of this past year before eventually moving to the sell-off. But that high was not registered in the Google Trends chart until about 2 weeks later. There seems to be a 1 or 2 week delay in between this low and this high. The high of the stock market, and then a follow through, a low of the VIX keyword search results. Going back in time, we see the stock market hit a high. This is around January, February of 2023. And as that occurred, we saw a low. What's interesting to note, though, over time, we have our up and down fluctuations, and that's understandable. But what's interesting to note is that over time, this seems to be trending higher. The 4 week moving average seems to be trending higher. So the stock market goes up and down, but it seems like the frequency of which individuals are searching for the keyword VIX in YouTube, that seems to be rising. Maybe that shows us that the overall sentiment is turning more bearish over time. It's turning more negative over time. So while, we have our ups and downs in the stock market, the trend certainly is in favor of more of us over time searching for the keyword VIX in YouTube in particular. And YouTube's important because we're looking for videos, and those videos will explain exactly what the VIX does and, when it can be useful. So it's pretty interesting data, and it's also interesting to see because it's a non-exchange source. It's a federal agency source. This is basically just consumer sentiment. So we're going to watch this, and we're going to, do more videos in the future and compare this to our actual VIX index that we watch, through our trading apps. And we're going to look for correlations that may exist between these two over time as well. We hope this has been helpful. We look forward to seeing you back soon.